And if you want to drop any questions that you have throughout the session, I'll be monitoring that as we go along. And I think that's about it in terms of housekeeping. I'm very excited to introduce you to Kirsten Green and Rebecca Kaden. Thank you again for joining us for this Fundraising in Uncertain Times Consumer Seed Plus track. Kirsten is the founder and managing director of Forerunner Ventures. She has over 20 years of experience in investment success that stems from a combination of product savvy, retail acumen, and a thesis-driven approach. As a founder, Kirsten has led efforts to raise over $650 million plus from leading investors and has invested in more than 80 companies. Prior to Forerunner, Kirsten was an equity research analyst and investor at Bank of America Securities, formerly Montgomery Securities, covering publicly traded retail and consumer stocks. Kirsten graduated from UCLA with a BA in business economics and has earned a CPA license and a CFA certification. Welcome. And Rebecca is a managing partner at Union Square Ventures. She began her career as a journalist and prior to USV was a general partner at Maveron, a consumer-focused early-stage fund. Rebecca was born in New York City and she studied English and American literature at Harvard and received her MBA from Stanford. Welcome.
Thank you.
And both are founders of All Raise, which is this amazing organization that obviously we're all here for and because of. But I wanted to start off by just asking, I think what's really top of mind for a lot of founders right now, what's in the mind of investors right now during COVID? How are you all approaching it with your portfolio companies? And then how are you kind of thinking about new investments at this time? Kirsten, did you want to start off?
Sure. All right, that's a whole lot of stuff. Short recap on the last 2 months and what I'm hoping to do for the next 2 months.
I can't wait.
You know, I think that listen, this has been, an unprecedented time on every dimension. And as kind of the situation started to unfold in earnest in March, when people really got to stay at home and businesses started to close, it was, all hands on deck for portfolio companies. Really to try to process what was happening, think about it in the context of, okay, worse, really bad, and try to imagine what is, various scenarios for the next couple of years and how the business might manage through that. And I think there's real value in kind of going to the depth of that, your version of the worst place. Of course, that worst place is still one where business matters and we're, operating businesses. So kind of go to that place, understand what are the moves that you can or should make to give yourself the runway of a couple of years. And then once you've kind of come to terms with that, you can kind of backtrack and think about, okay, what if it's not quite as bad, or what if it's not that bad, and start to think about where the different inflection points might be. And so, I think that was the first exercise that felt really important to everybody. And then it was starting to put that in place. And sometimes that meant that cuts or changes were being made up front. And those are hard decisions. But people made efforts to take action, not abruptly, but thoughtfully. And so I think that was kind of the next period. And then recently we've moved into a period of okay, here we are, this is what's happening. How can we try to make the best of it? How can we think about, what unique opportunities exist for our business today that maybe we weren't planning on doing, or maybe we're a couple of years out on our roadmap and we can move forward. And, that's where you kind of are allowed to bring a little optimism into the picture. And that certainly was welcome and fun. And so, I think it's been a lot of portfolio engagement and a lot of conversation, a lot of information sharing. I think people have felt a lot of value in that. And kind of in general, I've sort of enjoyed it. I think one of the best parts of our job is getting to work with founders and being able to contribute to the things that they're grappling with. So I sort of jumped to spend the majority of my time on that. In the last 2 weeks, we've started to think a little bit more about kind of new investments. Part of that is because of bandwidth. Part of that is because we've had some time to kind of understand what might be a nearer term priority for us in terms of new investments. And so, it's fun to be back in action, taking new deal meetings too. But I think in general, I'm obviously very interested in what Rebecca has to say, but I think this has been a unique time period where we've been spending outsized amounts of time on our existing portfolios.
Yeah. Rebecca, what are your thoughts? Have you been kind of following? I've talked to a number of investors, and it seems like portfolios were kind of the first triage. Now they're maybe starting to think about new deals. What has it been like at USV?
Yeah, I mean, I think Kirsten's summary is pretty accurate. We could kind of plus one that on our end. The way I look at it is I think March certainly, and March and half of April was the, holy shit, what's happening time. And our portfolio was thinking that, and we were thinking that, and our focus was on helping everyone gain some kind of understanding. If portfolio, call it the average board meets, some of them meet once a quarter, some of them meet once every 6 weeks or 8 weeks, some meet once a month. Like some of them were now meeting, once a week with other calls in that mix too. There are definitely companies that you said, now have a really daily cadence with, and that's important. And so that, was extremely time consuming, let alone everyone's figuring out their lives and where they are and who they're with and who's taking care of their kids and all those kind of things. And so
be a teacher, homeschool.
Yeah, exactly. Yeah, now you're a venture capitalist turned teacher. And so, we let ourselves have that be the priority for a while until we felt like, there's a long road out of this, whatever that means. But I think, as April went on, there started to be more plans for the companies. The companies processed. I think the portfolio really splits into kind of 3 categories. There's the market has been taken out from under them, like this is a real problem moment where their business is really threatened and there are severe decisions to be made. There's the other side where new trends have accelerated business growth in new ways. And what do you do in that moment, right? How do you best manage through that and take advantage of it? And then there's much of the middle, which is, wow, the world has just really changed around me. I'm not totally sure how that affects my business yet, but I know it does. What should I be doing? And that's a meaty thing to go through. So, that really was our focus. And in that time, and certainly as April went on, we talked a lot about like, what does it mean for us to do new deals right now? Can we do a deal without meeting people in person? What does that look like? How does our process change? All of that. And then what I say happened is like, we're a group of people who loves investing in things. And so when someone meets a company that they think is really special, suddenly it becomes a lot easier to imagine writing that check without meeting in person. And they're really excited about it. And we do it over Zoom. And so we've led one, we've signed one net new investment and have a term sheet out for another one. So we're starting to be active again. And I think that's our plan. I think, I don't know if any of the founders are in New York. I'm pretty skeptical our team will be back in an office before January. And we have business to do. And, we plan on doing it, but it definitely took us some time to adapt to the new reality of things, which is still definitely ongoing.
Definitely. Thank you for that. That was a lot, a very meaty response. I love it. One of the things you mentioned that I'm really curious about is kind of this new normal of digital pitching, digital relationships. A lot of venture, you're meeting with people and there's that feeling with the founder. And that's what kind of gives you, especially on the early stages, and that's what gives you kind of the confidence to invest. Do you have advice for how founders who are joining us, for example, can kind of build relationships digitally, or how to foster that kind of connection over Zoom or, over email or whatever it might be now?
Well, I'll start. I mean, so I'm going to give my authentic answer, which isn't going to be that helpful for this audience. And then I'm going to give another answer that I hope is helpful. My authentic answer is like, there isn't a playbook. It's about kind of, some relationships happen over time and they deepen over time. And some relationships happen much faster. And that has to do with the connection between the two people or about the business that you're talking about and the familiarity about that, or some of the circumstances and the conversation that is possible to have during that time period. So when I think about kind of, 10 years of doing early stage investing, I've always optimized among a couple of other, key things that are non-negotiable in terms of like what we're looking for in investment, I have optimized for a founder that I think I'm going to be set up for success with in partnering. And that's about kind of our ability to communicate, our ability to kind of exchange ideas and kind of find common ground in those, or really even challenge each other in a constructive way, and feel like it's somebody who it's like, when the phone rings, it's going to be pretty easy to pick up and have a chat and get somewhere productive, because that's actually like the easiest and the best way to do things. So in this environment, I am navigating between video chats and phone chats, and I'm trying to kind of focus on the quality of the conversation. And this is a unique opportunity in that here we all are at home. Like, we're all at home. It's like a level playing field. We're all at home. We're all pretty uncomfortable, probably, at least I am, talking on videos all day. We're all dealing with things, as Rebecca was mentioning, like around us, our kids, our homeowners. So I think you have this unique opportunity to have like a personal conversation, which I think can be very valuable. You don't want to meet somebody day one and be like, hey, like, where do you live? Are you married? Are you not? Do you have a kid? Do you have a not? It takes some time to get those things out. But now you're kind of like, here you are in someone's second bedroom, like, what's going on at your house? So that's actually like a unique advantage. I also think everybody feels a little bit vulnerable, or a lot vulnerable right now. How can you not, with all the uncertainty going on? It's not whether you are or not, it's just the degree to which you are, which also gives you a unique place to create connections from. And those are real advantages, because on a sunny day when everything's great and everybody's running around back-to-back in-person meetings, you don't make time for that, or you don't have the venue for that. It's just that you have to kind of show up and be yourself. So, my advice is like, be open-minded about, I think like, get on the phone, get on Zoom, have a conversation, be yourself. Like, it's important to show up and try and have some respect for the fact that you're having a conversation where you're just meeting someone, but I wouldn't get too caught up in that. I think there's a little bit of a right to kind of, have some more degree of casualness to it, which I think is valuable. So it's a little bit more like go with the flow, because as Rebecca says, we are making it up as we go along. So, feel free to make it up as you guys go along too.
Yeah, I totally agree with that. I also think, like, in general, I very much agree with Kirsten that for me, there's this piece of investing. I'm only going to lead 1 to 3 deals a year. We have a pretty, consolidated approach. And my process involves like me getting like pretty stressed out on a limb about the opportunity and really like spinning myself up and down. And, I take it really, it's a big deal for me to write a check. And I've just accepted at this point that that's kind of how I operate, that I need that kind of emotional turmoil to do it. And part of that is this moment traditionally where I've sat down with someone and was like, all right, like, let's do this together. You know what I mean? And you feel that clicking, and that's not all that matters. Lots of other things matter too, but it's been this important moment in when I think about kind of my investment process. And that for me is a real thing that has to change, right? Because I can't do that in this environment, and I've thought a lot about it. But over time, meaning like a couple weeks, so could evolve, as this has gone on, I've learned that there's these other benefits. Because sometimes like scheduling things in person means you meet on a Monday of one week and then maybe Friday, or maybe not till the next week because everyone's busy and running around. Whereas now, like, I don't know if you guys have felt the same way, but if push and shove, like, I can get on the phone with someone every day, like I can be in front of someone all the time. And so I've noticed that our deal processes take more touch points. I think they take more conversations, but the conversations can happen in a shorter period of time because they can happen with greater frequency. And as we adapt to the medium, like, I do think we're getting into it, and we're talking about more things. And so I think it's just an adjustment. And I think being aware of that and, just acknowledging that you're adjusting to pitching and, over Zoom, and the investor is adjusting to receiving pitches over Zoom, and developing the conviction, we'll figure it out together. And that might create a nice intimacy of having to do that together.
Yeah, I love this idea of like there's no playbook and we're all just kind of making it up as we go along. As you mentioned, like, it is a very vulnerable place to be kind of opening up our homes. Literally, I was watching, my boyfriend loves the NBA, and we were watching the NBA draft, and we saw into everybody's home. So it is a very vulnerable side of each one of us that we're seeing right now. And I think also just like checking in and making sure that people are doing okay mentally, because it is a very difficult time as well. Can you talk a little bit about just like mental health for founders, and maybe things that you have been suggesting to founders that you work with, or your portfolio companies?
Yeah, I think this one is huge. I think that there's a couple of vectors here. Like, there's just, people are being pushed and pulled in ways that are completely different than what was happening a couple of months ago. And it's unrealistic to think that that doesn't have impact on someone's mental health and ability to lead and perform, you know, let alone happiness as a result. One is like, we're in a much more stressful economic environment. Whether things are good or bad, you're dealing with a macro that's extremely uncertain, highly volatile, and reacting to a really sudden change of reality. And that's really hard. The other is you just have more stuff in your life going on. Like, and encouraging people to be really open about that, I think, is really helpful, because there's no point in hiding it. We all have that going on, and I think we got to get it out there, because it's, now there is no divide, right? Like, your personal life is part of your business because it's all happening in the same place. And so I think we have to be realistic about that. The other that I've been concerned about two other things. One is the burnout factor. I find that like when you're home, it's very easy to effectively work all the time. You know, because of the blurred lines. And I'm definitely finding that to be the case for some of our founders. And so like figuring out like, what does it mean to take vacation when you're, you know, at home? And that's okay to do. In fact, it's important to do, right? Like, how do you create new things for you and set that example for your team and all of that, and being kind of collaborative about that process. The other is, I've been concerned that, you know, as we figure out what the future looks like and what work from home looks like, and, you know, there's a lot of praise for companies going to fully remote, and I think some of them will and should, and that's great. But I'm a little concerned that this is a moment where the loudest voices get heard, and that the people who are quieter and maybe embarrassed to say, hey, like my work from home setup is not working for me, right? This is really hard, get overshadowed because it's cooler to say, yeah, I can go remote, like this is working for me. And how do you make sure in this environment that all those voices are heard and you can come up with a plan that favors, you know, flexibility versus one way or the other? So we have more questions than answers on all of them. That had no answers involved, but those are some of the things we're trying to ask and encourage dialogue about.
I'm also curious, talking about kind of changes that we're making on the business side. What do you all have predictions? Maybe Kirsten, you can start, about what's going to be different around fundraising, our valuations changing. Can you talk a little bit maybe about some of the trends that are happening now with this new normal?
Yeah. Again, you know, it's all unfolding in real time, and I think that the market is trying to figure out the answers to those questions, right? So everything is somewhat of a case by case, but it's typically grounded in like, this is what a company like this gets, and now we just lost that. So like, what is this that a company gets? So I think more than ever, you've got to go back to like what is really important, which is like, how much money does the company need? What are the key milestones that you're reaching for? And like, what's your view on how much time horizon you need in your round? And then looking at your existing cap table and seeing like, what is the setup that allows you to continue to have a healthy cap table, and marrying it against the business metrics so far. So you're threading a needle amongst a lot of things without the base of, you know, what is market for now. And I think that's the best anyone can do, because if you try to just tell people like, oh, the market's changed, like, you know, I think I found myself on a few conversations with like co-investors in early April that were like, oh, the market's down 30%, like valuation should be down 40% because it's an illiquid market and whatever. And it's like, well, you know, I don't know, like these don't have anything to do with each other because our valuations were so far ahead or out of the public markets before. So like that's not a good proxy. So I think you're back to kind of this, like, you know, the couple of things that contribute to a great setup, and focusing on the great setup. And then it's about, you know, is every side comfortable that like that's a setup for success? And that in some ways is always a, in the eye of the beholder reality. So I think the hardest thing, like I actually am in the process of negotiating a deal right now. And the hardest thing is like to feel like, what is it going to take to proof points for the business to allow you to get the next round? So if you've lost sight of that, it's hard to answer the other questions, which are, what is enough in terms of traction, and how much time do you need to do that? And I think we're like, most of the answers in these questions so far is like, we're just going to do our best and recognize that like those answers are going to reveal themselves over time. And hopefully we keep that front and center while we're continuing to create priorities in the business. But right now I don't know, I'm really interested in what Rebecca has to say, but like, I think one of the hardest things to do is like, I don't know what market is, lost market.
Oh, I think and as it applies to, founders listening, the weirdest thing I think about these Zoom conferences actually is that we can't see the people listening to it, which I understand why that's the case, but it's so weird. That's the thing to me.
You have no idea if everyone's like, what are you talking about?
Yeah, it's like,
forgive me for that.
Yeah. But anyway, the thing that I think is applicable there is that advice you would have gotten is like, what have other companies like yours done, right? Like, what is the price of a seed or a Series A? How much should you raise? How much should you sell? What are the benchmarks of that business? And it's not that that's useless information right now. It's helpful. Like, all data points are data points, but it's less helpful than it was 8 weeks ago. And so I think approaching it with somewhat of this mindset around what Kirsten was saying of like, what do I really need to get to where I'm going versus how do I comp to a market that existed 8 weeks ago, is a more productive strategy of getting what you want done, because we don't know how the market's changed either. All we know is that it's changed. And that's a really weird place to be in.
It's changed now, and we don't have a view on what it's going to be like in 18, 24 months out either. Not that you ever have that, but you do have a general, you have some basis of a framework to apply.
Yeah, and what I'm worried about in that is less like, am I overpricing or underpricing things compared to my peer set, and more, am I overpricing or underpricing compared to what your next round of funding is going to look like?
That's the biggest thing.
In 18 months, so that even if you do exactly what you say you're going to do and hit all of your benchmarks, are you going to be a set up for success in what that round looks like? And that's the thing that like, there's just no way for us to know, but I'm concerned about, because if that goes the wrong way, that's not good. And so,
it's another dimension of risk.
Yeah.
Yeah, I'm curious also because there's a lot of founders who I think are here either thinking about raising their next round, most from seed to A, and they're asking like, what are kind of the metrics that investors are looking for right now? Obviously, they're different than when like pre-COVID, but how do I kind of benchmark myself? What am I trying to attain to get to kind of hit all of these check marks to go to the next round and get that money? I don't think either of you have a clear-cut answer in terms of like where it would go, but are you able to speculate a little bit on it?
I really struggle with this question because it's so dependent on what the company is in the category. Kirsten, do you have like a framework that you answer this question with?
Yeah, no, I don't. It sounds like maybe it seemed like I did because I was anxious to answer it, but only mostly to say that I don't. I think, I actually think that like from C to A, it's typically kind of hard. Like, I hesitate when I talk about with founders that we work with that are going to be reaching for their next round, particularly at these early stages. I hesitate to ever stick a stake in the ground and say, this is the amount of users you have to have, or this. I more talk about like, what are the elements of your thesis that you're proving? What are the elements of your thesis that you're demonstrating in the results? And are you starting to establish a trend? Because if there's a trend, somebody can think about like, what is the trajectory from here? And they have an idea what they're underwriting to. So I think that actually like really applies in this moment. It's like, what are you doing to sort of, really prove the merits of your business model? And what are you doing to kind of unearth a trend where someone can build confidence that it's headed in a direction? And I think that provides you like a couple of meaningful things to start with.
I have heard you say that to entrepreneurs, and I always think it's helpful.
We also got a question about whether somebody should prioritize revenue or growth. I think that's a pretty case by case, like company specific question as well. But do you see any trends right now on the consumer side around companies in particular verticals that should be focusing on revenue
I
versus
would
growth?
rephrase that question a little bit
Okay.
to, I think, and this totally relates to what Kirsten's saying. I think it's very hard to benchmark certain numbers. And what it is to say is like, you're trying to prove that there's a model that works. And that as you add capital to it, that model will scale with leverage. And so rather than revenue or growth, like what does your funnel work, right? Like, does the underlying unit economics of the business work? Meaning when can you acquire customers for amount of money that you make money on the first purchase or in a payback that's reasonable or whatever makes sense for the business model that you're, working on. When you grow, is there a funnel that creates leverage growth? Meaning, can it scale? And so I would think about those underlying building blocks, because even if the business is small, if you're showing that a funnel works and it's there and you're in a big enough market, people will be excited to put money into it to grow it. But it's very hard to put money into something that you don't know has an underlying funnel that works.
Right. So I agree 100% with that. And I think if you want to, maybe take that and tie it explicitly back to your question, you can say revenue or growth. I think what we're saying is like just having growth and not having proven out the revenue, I don't think is good enough. I think that it doesn't actually demonstrate that people are willing, like what happens when you ask people to pay? Are they still willing to come in? Does it change your retention rate at all? So I think it's important to show that.
Definitely. And then I just have a question around general trends on the consumer side. Have you all noticed like different verticals that are growing super fast right now because of COVID and are kind of exciting investors? Obviously things are kind of in a flux, so we don't know like in 18, 24 months if those trends will continue, or things that are just really suffering right now, companies that are struggling because of everything that's going on, and advice to kind of those two extremes.
This is the question on the chat.
I
think it's related.
Yes.
Like if basically your question is like, if your market's been really changed by COVID, what should you do? Right?
Exactly.
Really transparent. I just think this is a moment where transparency will help entrepreneurs. I think investors are really struggling to invest in markets that are really overturned by COVID. I think we all know the situation is going to get better. I think we know things will reopen, et cetera. And I think investors that can see an opportunity there and make a trajectory bet, it's probably the place of the biggest opportunity, right? Like it's probably where there's real money made, but I think it's really hard to do because the timeline is really, really uncertain, and the lingering effects of the behavior change because of this have a lot of unknowns. So it's on our mind to do that, but realistically, I think if your market has been really taken out from under you by COVID, meaning you're not growing, you're kind of at a standstill, I don't think it's a good moment to go out and raise money. Do you disagree with that?
No, I don't disagree with that. And I guess I would add to that I think, listen, let me describe an ideal world. In an ideal world, as a venture investor, you have a view on what the world is going to look like some years out. Let's call it 5 for purposes of this conversation. And you're trying to find something that is, and 5 years out is going to be super important. Like everyone's going to be doing it, caring about it, needing it. The business is going to, the world is going to change in a way that your business model makes sense. And you're trying to tether that to a moment in time where there's enough interest today that like anybody cares to start getting on board, right? And so if you're doing that, like you're always operating in the path of progress. Right now, there are certain things that are happening that are super unique because of COVID. And in the context of that, it is pulling forward some of those trends. And I think that's where everybody is like really focused, is like things that they were already interested in, that we all believe, that somebody believed were going to be important going forward, that right now are kind of showing themselves in like how possible they are. And that's where the momentum is. That's, that's telehealth. That's like, online learning. And I think that like, if you have a world where there's all these unknowns that we've been talking about for the first half of this call that you're trying to navigate through, you might, and you can only do 1 or 2 deals, you want to do something that at least can benefit from a tailwind. I mean, that's just like, honestly, that's just smart from our standpoints. At the same time, as an investor, then you're just piling on to what everyone else is doing. So, how can you think differently? And I think there you've got to step outside of COVID and go back to the other question, which is, what was your view of the world kind of 5 years out? Is this relevant in the context of that? And, how much does COVID maybe compromise that? And that's where you think a little bit differently about what deal you're putting together, right? And if it's like an entry point you feel good about. So,
Great.
yeah.
That's amazing.
And if you have a business right now that you feel like is total, like I had a company in my portfolio that I would say is operating in the eye of the storm. And they sat back and thought, okay, this moment is the eye of the storm, but we had a plan to build a business in the path of progress. And we had a view of what the world was going to look like in 5 years. And we thought, this year we're going to do this, next year that. But because this year's plan is off the table, let's look out and see what else were we going to do. Is it viable now? And they changed their roadmap such that they pulled something from, year 4 into year 2. And, it has potential right now, more potential than what the other thing has in this moment in time. And when things change, they will go back to what they were doing before, and they will have the added benefit of having built this other product. And so I think the value, that you're creating as a founder in that situation is, one, you're helping your company get through a time period by doing something that's additive and productive and contributing to value potential. And 2, you're demonstrating your flexibility. So one of the most valuable things I think entrepreneurs can do right now to create value for their companies is to demonstrate flexibility. Mm-hmm. For the past decade, while there hasn't been a lot of exogenous factors and you've been operating in a pretty stable environment, it has been about demonstrating growth. It has been about demonstrating, a lot of kind of how fast can you get people excited about what you're doing and monetize and make it make sense. Now you have a chance to show like, how operationally flexible can you be? How nimble can you be? How fluid can your business be? And there's value in that too, because it sure is nice to be involved in a business that doesn't have to have hundreds of millions of dollars invested into it to be meaningful. So, and capable founders, and it's another strong skill that you can demonstrate.
Definitely. And it's really interesting that women are underfunded when it comes to venture dollars. That's part of the reason All Raise exists. But female founders have to operate on a very lean budget. And so I think that flexibility that you just talked about, Kirsten, is so important, especially when you're operating kind of not with hundreds of millions of dollars on your investment, and it takes more, your runway is shorter. It also relates to this question around, there was a founder who asked about keeping momentum going at your company, and demonstrating that type of flexibility is super important so that there's this continued flywheel. Rebecca, do you have any other advice for kind of keeping momentum going at companies for founders?
Yeah, look, I think I think part of that is adjusting to this as a new normal for however long it is, versus looking at it as like this blip in time, right? Like, okay, now we're settling in. What do you have to do to create routines and, structure that keeps people going and it feels like this is reality? And, we've seen everything from, daily virtual stand-ups, new kinds of tools and platforms. Like, you got to try stuff. But to Kirsten's point, like, that's going to require flexibility, because everything you knew that was how you operated this to do it before, it has to change, right? You got to like try these things that are really uncomfortable. But we're seeing some people do that in super, interesting ways. Like, how do teams coordinate and collaborate with each other? Like, what is, always on video culture look like? Where does that work? Where does that not work? Where is information sharing coming in? But I think trying things quickly and being willing to kill the things that don't work for your company, and having a really strong feedback loop internally, I think that's a really big one, because without seeing people face to face, sometimes that can get lost.
Yeah. Can you speak a little bit more about feedback loops internally? And I know communication with your team, with your employees is so critical right now, but it's also really tricky because, as you mentioned, we don't get all of those visual cues when we're meeting in person. For a founder, they're probably stressed, their team is stressed. How do they demonstrate leadership and kind of keep that that internal feedback loop really strong while inspiring their team and kind of it's a dark time, but we want to like have some sort of hope, I think, for those who are working with and for us.
I'm not sure that this is all that different than the main principles that held before. I think a lot of it is the channels it happens through, right? Like, I think there's this balance now, and we've definitely heard that from our portfolio around transparency, right? Like what's working, what's not, what are people worried about? And also encouragement, like you're still the CEO of the company, like share the wins, you know what I mean? What's going right, or what has to happen to go right? Like, how, which again, like I think is you're most able to do if you really have a pulse on how people feel and what's going on. And so does that mean a lot of the companies, I think probably from the people on the call I know are early at their seed stage. And so you probably don't have a ton of employees yet. Like what is your kind of communication with the people on the team? What are those checkpoints? How are you getting the temperature check of how they feel and how they're doing? And then sharing that around the community. And with, our team is 15 people all in.
I was just thinking we could talk about our own teams, right?
Yeah, they're the same size. So we've tried a whole bunch of things. Like, traditionally we did investment team meetings once a week on Monday. Now we're doing them Monday and Thursday. So we have this like other checkpoint during the week. We also do a partner meeting for an hour each time, like way more devoted time than we would have spent, but it's keeping us really in touch with each other. We also, usually the investment team is only investment team members, but we've opened it up at the beginning to anyone at USV, admins, a network team, whatever, because we just kind of want to check in with everyone and have people feel together. Like these changes that are easy to do, but make a big difference to people that we found effective. The other kind of biggest one for us is USV in its history, I've only been there a couple of years, has tried Slack so many times apparently, and it's never really caught. And now we're like heavy on Slack. So we're all like, we
have channels that are like each other where you're sharing personal things, and we have funny, like to try to, bring some of that stuff, like
totally.
Create a space that says this is okay. If not, like, let's do it,
Exactly.
Yeah.
Which is new, but it's like it helps. Or like Andy, one of my partners who like loves coffee, did a Friday lunchtime coffee chat where he like showed us all the different coffee appliances in his house. Do you know what I mean? Like some things that might have felt overkill or trivial, I think doubling down on
just wouldn't have made time for, because somebody didn't say like, how can we stop and like and make sure that we're staying connected as a team? And it is the little things,
Yeah.
I think those are great things, Rebecca. Like we've done some of those too. One of the things that I think is kind of helping hold glue is we have an 11 o'clock Zoom every day.
I love that.
Everybody can't join every day. And some days it goes on for 45 minutes and some days it's 10 minutes or whatever. But it's like, hey, let's just like, and it's there isn't an agenda. Mm-hmm. It's just like, how are people doing? Like, what's going on? Like, oh my God, did you read this? So, it's creating space for something. Like ordinarily we're about meetings, like productive, like here's the agenda, here's what we're going to get out of it. How about a little space to just like, you don't have to have an agenda. Let it roll.
Yeah. I like that because I noticed that with our team as well. We have one coworker who I think she really just misses the interaction with people, and I do too. And so just to check in with everyone and see what's what's new in your life, even though I've told my mom
last night or whatever everyone's watching, I don't know.
Yeah, that's great. So I wanted to move on to some of the questions we're getting in the Q&A. Those folks who are on the line, feel free to start dropping questions in there. I wanted to start off with Julia's question around mental health. So to return to that, and she's found that this is a major issue for female founders at all times and not just COVID. So she wanted to get both of your takes on company building styles of female founders versus male founders, and also their pitching styles, and how this aligns with your goals, if it does. And she has this little anecdote around how her female friends are having a lot of mental health challenges, where they're put in situations that have them pitching and growing companies that seem overly aggressive or exaggerated, especially with VC-backed companies.
I can start. So I think there's a couple things here. In general, with mental health things, I think promoting and advocating for real resources is wildly important. So, whether those are virtual resources or in-person resources when allowed, I think I love when our companies support, their access on their teams to it. I love when founders are open about utilizing those assets. I think the more we can say, like, having this be a tool that you use is like having an executive coach or a board, right? Like, it's important for the success of you and for the business, the better. And so, that's, I think, number one to me here. And we do that across our portfolio. I don't think that's a gender specific kind of thing. In terms of women pitching and stuff, we can have a conversation about, how it's different and all that, which we definitely can go into. But what I would say is the thing that I've seen help the most, and in its own iteration of how this relates to my job helps for me, is a network of people around you and a community to support you, right? Like, I think if you're going to go out and pitch, or even if you're just going to be a CEO at all, or anything at all, having a small trusted network around you of people you can go to and say, like, am I crazy or are they crazy? Or, can you believe this happened to me? And have people say, that happened to me too, or here's how I would handle it, and just temperature check for you and be that sounding board can make it feel so much less lonely. I mean, one of the best things about All Raise for me is I feel like it reinforced and helped me grow a network of people, like Kirsten, where, like, I can call her and we can be competitors, but we're also collaborators and friends. And it's so instrumental and so in my career and my happiness. And I think finding those people early on as a CEO is really, really valuable. And I encourage everyone to do it and to leverage All Raise to do it.
I mean, well said, Rebecca. I think that, like, having friends and having a support system in life is essential. And, like, this is one to don't ignore it, and finding peers that you can have those kinds of conversations with, I think is really powerful. More so maybe even than, like, reading all the materials or whatever else might be out there.
Awesome. I have a question that was pre-submitted before we started the session about adjusting their pitch and whether there are any new questions founders should pitch for in light of COVID.
I think there's a couple things that are coming up, right? I think one is, like, there's this question mark in the capital markets, right? So, like, access to funding and how it evolves, how this is going to affect downstream funding or different stage funding, goes back to what we were talking about earlier. We just don't know, right? Right now, I think deals are getting done. I think there's ambiguity, all this kind of stuff. But I think talking about the capital efficiency of the business, the runway, I think there's less appetite out there. One data point impression for companies that at the outset are going to consume huge amounts of capital and are going to use capital as a defensive weapon against competitors than there was before. And so being mindful and ready to talk about that and capital efficiency, I think, is increasingly important. I think people want to know your plan on hiring. Are you going to hire people anywhere now? Or are you going to hire people in one location? That can change, right? You're not, signing in blood on any of your answers.
Be situationally aware in your pitch.
Yeah, exactly. Yes. How are you framing your bit? I think what you don't want to do is say, I know COVID's going on, but, like, here's my pitch for my business. And once COVID's over, like, it's going to start growing like crazy again. And so we should be focused on that. And try to kind of, squishy away.
Yeah, hand wave it away.
Yeah.
That makes sense. Awesome. And then I wanted to talk a little bit about the difference, if there is any that you might know, of the investment scenes where you all are located. Kirsten, you're in San Francisco. Rebecca, you're in New York. Any differences you might have noticed between these two coasts of investing?
I don't know. I don't know that we have enough data points for that, but I'm just inferring one, which is now that there's not an expectation of an in-person meeting, like, maybe location matters less because it's all been equalized on Zoom.
Yeah. That's been my biggest realization. Like, I realized I talked to a company that one of our analysts had met, and then I spoke to them and I thought it was really interesting and cool, and I wanted to dig in more. Later she was like, oh, they're in Latvia. And I was like, they are? I had no idea. Like,
and I'm pretty sure that would have just not had a meeting originally, right?
Yeah. I was like, I didn't even ask it. I asked, like, where are you in terms of they're like, oh, we're, you know, in our apartment, our kids are home. We had this like very micro location conversation, but I didn't even know where they were. That to me is fascinating because previously there was like, are you in New York? Are you in San Francisco? Are you somewhere else? Like, and then I would think, okay, if I'm going to like really do this and I need a win, like when am I going to get on the plane to go to wherever you are? That went away so quickly. And I think that's actually an advantage for everyone, including us.
Do you think that's going to continue where you don't have to go all like have that in-person meeting? We don't travel necessarily as the headquarters team for Always, but like I know going and having that FaceTime is really important for investors who I see like all across the country or saw all across the country. Do you think that trend will continue?
Listen, I think almost everybody I've talked to is like, I don't miss traveling. Like I'm going to travel less when I'm, on the other side of this. So I think in general, it might take more to get people on a plane. I think if we're in this situation for an extended period of time, whatever that may be, we're going to learn to get comfortable in the way that we need to. And maybe that really will change what the process is permanently. If it doesn't last for that long and people don't have to hone it and get super familiar with it, it has more likelihood to go back. And that's just like, that's probably true of every trend you're seeing right now.
Yeah.
Right? So what I think I will stick with is like, you know what, for a first meeting, like a lot of times it was like, we have an in-person meeting for the first meeting and it's like really hard to find time for all of those, you know, and a call's not satisfactory, but the video is pretty darn good. You know, you get to like, you're engaged, you're looking at each other. So I'm like, maybe I'll take more first deal meetings because I can on video, you know, and like that might stay because that's just like efficient for everybody. You know, I hope for a time when I can actually spend some time with someone in person before we're like all the way to the place where we're like, let's hold hands and be buds for the next 10 years. But I don't know.
I think you prioritize the important moments. And I think those can vary, right? Like right now, I would say I'd love to spend time in person before I like really made an investment. In 6 months, if I'm still sitting in this, you know, office doing everything over Zoom, maybe I won't feel that way anymore. You know? And so the plane thing I think is trickier. Like, is it a risk or is it a, you know, where I think it's impossible to know. And so I think kind of got to play that by ear, but including like, in general, I was a big in-person board meeting person, meaning like I flew to San Francisco often many times a month, and I'm finding a lot of them work pretty well. You can see everyone in these box. Like,
I think that if you have everybody on the Zoom, it's like it's maybe not as fun, but it's arguably just as good. It's just that when you're the only person on Zoom, it's not so awesome. Like all our board meetings online, and then we'll go get together in person and do site visits or activities or something we have engagement.
Yes, that is, I think, the learning that what doesn't work is mixed medium. Okay. Some people in person, some people Zoom. So we did this event yesterday where we had 5 later stage companies present. We do this thing every year. Usually it's in person, and they present to a mix of kind of late stage and public market investors. And we did it on Zoom, and we were very like, not sure how this was going to go. And the feedback was in many ways, it was better. Everyone had a front row seat. You could see all the questions. So no questions got overlooked. People could tune into the things they were interested in and out of the things they weren't interested in. And so we'll see, but I thought that was interesting.
Awesome.
We're learning new skills.
Yeah.
Yes. I see a question also around check sizes and whether those have changed and if founders should adjust their raise amount.
I mean, listen, yes and no. I mean, I think that like you could argue this one from both sides of the fence, right? Which is one, it's like maybe you should just raise less money because it's overall less risk that everybody's being, you know, asked to take on. And on the other hand, you're like, we should raise more money because you need more runway. It's more uncertain times. So I think you got to go back to like the first principle of like, what do you need? What do you need to set yourself up for success? Like, and really understand what success, like how you're going to define success, and then try to have the runway for that. I think that like you need to be, I would suggest that you be open-minded, you know, to what the process is. Like don't be hell-bent on what win or fail is in a fundraising process right now. Just be confident that like wherever you settle, it's going to be on something that you can make work. And maybe you thought you had to go this far, but maybe you can only go this far, but that's like still something, and that's making progress. And if there's people that are willing to do that with you, great, you know?
Yeah, I mean, totally honestly, I think Chuck says is if they're not already down, we'll go down. And here's why. Like, I do think the market was looking for a valuation reset. I don't think it's super steady across the board. I think it's bumpy and confusing. But I think prices are going down in some ways. There's outliers to that, where I think things that are extremely on trend to
the barbell.
Yeah, to the markets that have been accelerated by COVID are in very high demand. And so they're going the opposite way here. But overall, and if prices go down, sizes of raises will go down as well to even out the dilution. And so I do think overall we are kind of seeing that.
Great.
Although I haven't seen that yet, though.
Okay, good to know. I wanted to just take the last couple minutes that we have here, getting your general advice about what you suggest to founders right now who are looking to fundraise, and especially being a female founder, where it can be a little bit more difficult. What are kind of last words that you would leave this group with? Rebecca, maybe we could start with you.
Yeah, look, I think there is no doubt, and I have not heard a venture investor say yet that great businesses won't be started in this environment. We very much believe they will. And that moments of great behavior change, which we all know we're in, provide massive opportunity to start new businesses. We're all one, our attention is more open than ever. Two, we're all more open to new tools and products than we've ever been before. There are massive, exciting things about this moment, despite a lot of macro pain and hardship, that are going to create new ubiquitous products and services that both of us are looking for, right? Yeah. And so we're ready, like the excitement is there. I think it's a process thing, right? Which is pressing you to be a different kind of storyteller and to come alive in a different way. And what I would focus on is pick your targets wisely, rather than spread so wide, like come up with a list of people that have shown interest in what you're building and decide to spend some time building those relationships. So be okay with a few more weeks, a few more calls, coax that relationship along, practice telling that story, let them see the business over time, even if that time is 6 weeks, versus saying, okay, we're going to raise a seed, it has to be done in 2 weeks. And if you do that and let yourself have the time to do that, I think a lot of interesting things are going to happen right now. And, we're both game to do those. And so I'm not super negative that, fundraising's coming to a halt.
We started with Rebecca giving me a +1, and I'm going to end with giving her a +1. Like, really well said. I think it's important to keep that optimism and keep that resilience, and understand that like your fundraise process, might look different, like Rebecca was saying, like longer or, different kinds of meetings but so is everything else in the world right now. So that's okay. Don't judge yourself for it. Keep in mind, this is true for all fundraising, but like a lot of times, like your ability to get in front of somebody or to have it resonate with somebody is not about you or your idea as much as it's about them and what they're dealing with and everything too. And I think that's like really prevalent right now too, which then feeds into this idea of like, allow yourself some time if you can, like, don't try to jam things through too fast. I think that's tough right now.
Well, thank you both. I love that we ended on this optimistic note, because I do think it's really important to keep in mind that great businesses come out of these very trying times, and that we're all here for you. The All Raise community is here for you as well, so definitely use those connections. But thank you again, Kirsten and Rebecca. It's been such a pleasure chatting with you all. And thank you to those who joined us. We're really excited to help you out and support you in whatever way you might need. So with that, I will end. Thank you again, and hope you all have a great rest of your Thursday.
Thank you, guys.
Thanks, Rebecca.
Yeah, good to see you.
Thank you. That was fun.
Bye.